Namaskar. Good morning to all of you. I am again before you to talk about a potential multi-bagger. Its name is Bhansali Engineering Polymers Limited. It has been performing very well till 2 quarters ago. It actually manufactures acrylonitrile butadiene styrene or otherwise called as ABS, and another product called as SAN, HRG. This ABS is a raw material which is used in many industries like automobiles, home appliances, telecom, luggage, bus body, and various other multifaceted applications. Now, BEPL has got two factories at present. One is at Abu Road in Rajasthan, another is at Satnoor in Madhya Pradesh. Abu Road is for ABS and Satnoor is for HRG. Now, Bhansali is contemplating to actually it has started lots of preparations for a Greenfield huge unit of 200 KT per annum at of ABS especially at or near Pipavav Port in Gujarat. It may take some time for completion, but till then the Abu Road and Satnoor factories will be functioning. Now let us look at the Q1 results. Now, before going to the Q1 results, some notes are there in the Q1 results that also we need to know. By this time, all of you must be aware that there was a fire accident at the Satnoor, Madhya Pradesh factory premises on 29th April 2018. The fire was confined to the flocculation and drying section of the plant, one unit actually. Now it lasted for slightly more than a month, less than a month, but the checking etc. took a little more than 1 month, and ultimately production restarted after recommissioning on 1st June 2018. Closed on 29th April and restarted on 1st June. Now about that fire accident, the company has preferred insurance claims. It is hoping to get them. So the loss is expected to be minimal, not much, not significant. That's what the company expects. Then they commissioned, they asked a Japanese-led technical investigation team to go into the causes of the accident and suggest preventive measures, etc. The team said after a lot of deliberations that there is no real problem in the factory at Satnoor. Everything is all right. But there was a static charge, which is very rare, which can happen anytime, anywhere. So that has happened here, and that has resulted in this huge fire accident. Of course, thereafter they have set it right. Now, when the fire accident happened, the management team has taken some precautionary measures for ensuring production. The Abu Road plant was made fully operational during that period, that is April to June. They made it fully operational to ensure that adequate inventory of SAN copolymer could be built up. So Abu Road plant supplemented its production, and the company also made arrangements to import HRG to ensure that shortfall of the production at the Satnoor plant is compensated. So these two measures ensure that the first quarter results are not fully down. Now what we are going to see as results are down but not fully down. Management team has taken reasonable precautions. So insurance claim also has been preferred for the loss of fixed assets. See, the production loss cannot be compensated. Only the loss of fixed assets can be compensated. That has been preferred. So, significant loss will not be there. That's the feeling of the management. So, how much is the loss? That is not mentioned. How much is the insurance claim? That is not mentioned. But all that is said is there will not be any significant loss. Now, at the Abu Road plant, there was a capacity expansion planned for the next quarter, 1000 KTPA to 1030, 100 to 137 kilotons per annum. That has been shelved for the present because the plant which is coming up at Pipavav Port is 200 KTPA. Therefore, the management wants to concentrate fully on that Pipavav plant construction. So, they have virtually shelved the project at Abu Road from 100 to 137. 80 to 100 has been completed. 80 to 100 has been completed. It is working, and they are expecting to reach 75% capacity utilization shortly. Now, in regard to the expansion from 100 to 137, there may be further announcement shortly. But my feeling is, you may have a 200 KTPA plant at Pipavav Road. So, what will happen to the plant at Abu Road, which is already up to 100 KTPA? If that also functions, that will be great. That 200 at Pipavav Road and this 100 at Abu Road. Pipavav Port 200, Abu Road 100. Totally 300 can be there. But from the management commentary, it's not very clear whether Abu Road will continue. Management has to give their clear-cut comments on what will be the future scenario after the Greenfield expansion happens. No, Abu Road is functioning well. I don't see any reason why that should not be enhanced from 100 to 137 as planned right now. If the demand is great as stated by the management, they should plan for the 200 plus this 100, maybe even more at Abu Road. Abu Road has all the logistics as on today. Clients are there, logistics are there, everything is in place, sales are going on. So, a fully functional factory, why it cannot be expanded? That management needs to rethink. And in any case, Abu Road should be additional even after Pipavav Port factory comes. That's what I feel. Management will have to look at it. See, they can't simply take away the factory from Abu Road and place it in Pipavav Port, which does not appear to be intelligent. That's my feeling. Now, let us, in the background of all this explanation, let us see the Q1 results. The net sales are at 202 crores, which has decreased by 10% year on year and 33% quarter on quarter. So, this is after all the efforts made to import, etc., etc. Raw material at 160 crores has increased by 5% year on year and 9% quarter on quarter. The next item, purchase of traded goods at 61 crores has increased by 1370% year on year. We have already said they have made imports. And 27% plus quarter on quarter. So, traded goods purchase has increased significantly. But stocks at minus 75 crores has decreased by 764% year on year and increased by 503% quarter on quarter. Probably they have utilized whatever has come. Consequently, EBITDA also has come down. When sales has come down, EBITDA also comes down, and it is now at 26 crores, decreased by 8% year on year and 39% quarter on quarter. EBITDA has come down 8% year on year, 39% quarter on quarter. profit before tax is also at 26 crores, decreased by 7% year on year, 44% quarter on quarter. So, net profit at 17 crores has decreased by 1% year on year and 41% quarter on quarter. So, net profit is at 17 crores, decreased by 1% year on year, 41% compared to the last quarter. That is because of the fire accident. Now, the diluted EPS on a face value of rupees 1 is still comfortable at 1.01, though terribly down compared to previous quarter, which had 1.72, and last year same quarter 1.05. Approximately 1.0, 1.01, 1.05. 1.01 now, 1.05 last year first quarter. Now the current market price is beaten down 135. You remember it has gone beyond 200 also. Now from there it is down to 135. Price earning ratio is still very high at 33. And the price trend indicates an increase of 77% in the last 1 year from 76.5. It has increased to 135. So in a 1 year there is a significant increase, but considering the demand potential, profitability, etc., it should have been much more, but for certain factors. Now, why did it fall so much? In the fourth quarter results, the expenses had shot up from 198 crores to 262 crores. I just remind, fourth quarter results had two factors. One is a forex loss of 6.82 crores. Another is a debtors write-off of 8.56 crores, which affected the net profits in Q4. Previous quarter results, forex loss and debtors write-off. But simultaneously, there was some good factors also. It became zero debt company in Q4. Now, based on this, you will have to factor in your decision making. No doubt the company has a great product. The company did enhance its capacities of production, etc., wonderfully during the last 1-2 years. Now the company also has good plans to more than double the production at Pipavav Port, but it's a big project. So when it will actually complete, we'll have to await for the management commentary. Why it wants to shell the expansion at Abu Road? That also, I feel it's not intelligent. They can go ahead with that also. If the demand for the project is great, and if Abu Road is functioning well, and if expansion is easy there, why not? And Pipavav Port is a Greenfield expansion. It will take some time to finish, test, and start production. So when exactly it is likely to start production, now management commentary is most essential to predict the future of Bhansali engineering. No doubt in the long term, Bhansali is likely to become a great company. Its product is great. Demand is considerable, and Pipavav Port is suitable for both internal sales and also external sales. So all these are there in the long term, but what is the short term? So Q2 should provide the answer. Let us hope that Q2 does not give the type of excuses that Q4 and Q1 have given. Otherwise the company is great. Now long-term investors can go on accumulating. That's what I feel. If I were in your place, I would do that. But you will have to take the decision based on all the considerations and based on your other portfolio management, etc. So I wish you all the best of luck. Please do subscribe to my channel if not already done. Please tell your friends also. There will be more and more videos coming. Thanks a lot. Thank you.